Hey everyone, how's it going out there? Hope people are having a good trading day. Just heard Apple's no longer going to work on a car and now they're pivoting towards generative AI. So, we'll see what that looks like. Does that mean Siri is going to produce useful answers now? Is that the direction that things are going? That would be cool. But no, seriously, it's been an interesting day. We did see a lot of activity in Apple options as well, and that's continuing here. Seeing a fair amount of buying on the call side as this news coming out. Another 350,000 in premium being thrown at the Apple 185s. And overall, it's basically a day where the opening range kind of gave us a clue that it was going to be like watching paint dry, right? And we never really did much with that. Let's go back. We can see we pierced the bottom of the opening range, you know, late morning, I guess you could say, early afternoon. And then we just had this reversal right back into it. So really not a lot to talk about. Just kind of a boring back and forth market. We've got the hot call really drawing price towards it. We've seen all day also that these levels of high interest in options, we've seen large levels of resting liquidity coinciding with these. We saw the second most active put, really drawing futures down to that area of large resting bid. We didn't quite get down to the most active put contract. We'll see what the last hour brings us, but we're now right back up to the most active call.
Brent crude
And
futures
that,
settle at
Coming up today,
as well as the warm call,
$83.65 per barrel. That's up $1.12
trading
or 1 spot
CPNG,
we've
36%.
seen that.
Kupang, DVN Devon Energy, or
So we've seen that kind of be an area of coalescence, right? There's been a lot of interest in these levels where there's active options trading, or also the midpoint earlier as well. There was a large amount of resting liquidity there. So I think it's interesting just to see how much these levels really do have an impact. We see this is a market that's also kind of more imbalanced in terms of how options are trading. There's about less than a 20% variance between the most two active calls and the most two active puts. So more often than not, you're going to have the midpoint painted there, and you're going to see price kind of drawn towards that. It also usually has some bearing as to where you'll see the point of control and VWAP. Now, we've seen the midpoint come down a bit as time has gone on today, but I still think it's interesting to see that. Like right now, as we're getting closer to the close here, there is a little bit more buy-side transacting. We can also see it in the single stock options flows, whereas there is a lot more premium being transacted on the call side than the put side, and a lot more of that premium is being bought than sold. Let's take a look at some of the market internals here as well. Better breadth today, but nothing to write home about. About 58% advancers versus 36% decliners. Seeing some more strength in utilities today. They really had a rough bit yesterday, so seeing a bid come back there. And a bit flat in some of the bigger companies. Microsoft, Nvidia, Amazon, pretty much flat. Apple, pretty flat as well. Google, Meta, not much going on there. Some strength in financials like Bank of America, Wells Fargo. Dollar General up 3 3/4. But overall, a bit of a ho-hum day in terms of stocks. In the futures market, wouldn't you believe it, cocoa's actually down for a day. It's not setting new all-time highs today. So I guess they've decided to take a little bit of a breather there on the never-ending speculative fervor in cocoa. This is driven by weather, creating more problematic crop conditions, and that's driven a lot of hedge funds. They're now the most long we've ever seen them in cocoa. That's also led to, a lot of price increases in cocoa as well. The more people that are piling in, obviously they're creating more artificial demand for the product. So the other side of it is there is some supply scarcity. There is droughts and floods and other things that are hampering supply from the Ivory Coast. And that's a key cocoa producing region. So that is actually impacting some of these other companies. They've talked about it, like Hershey's and Nestle have talked about it on their conference call about how this is impacting their margins and, what they may do moving forward. But at the end of the day, I think that cocoa is a great example of a parabolic trade. It's definitely not something I would want to be getting into at present levels. I'd be more inclined to be a seller, but it's been a heck of a trade. I mean, over the last year and a half or so, this thing has almost tripled. So it's pretty incredible to see how far it has gone. That's been one of the reasons we've seen some of these commodity ETFs really on a tear as well. Another area there's been a lot of strength is cattle and hogs. Those have had a pretty strong bid as well. We did get that 7-year auction in earlier, and it was pretty well received. I have the 10-year price chart up here on screen. We can zoom into when the auction actually happened here, and we can see, there was a decent response, but now we're actually selling to levels that are lower than when the auction happened. So this is another one of those situations where there was a good auction, but the market's still not impressed. So rates are actually starting to push a little higher on the long end of the yield curve here. And we are at a somewhat important area of support. So it's going to be important to see how we trade around these levels. We were building some acceptance here back in the higher volume node. I talked about that a little earlier on my stream today. That's something that I think we need to watch, because if we do see rates start to really tick higher on the 10-year and approach 5%, I think that is going to start to spook parts of the market, particularly the longer duration risk parts of the market. Over here in crude oil, we can see we're now at 78.74. And 78.50 was a big area of interest earlier. We pushed above it. We can see that interest coming back there, though, on the contract. But now also larger area of interest moving up to 79.10 in the front month crude contract here. So something to watch here. I mean, this is not a very liquid contract. So, right now it's trading like 8,000 or 8.6,000 order book depth. So when you see an arresting offer of 121, it grabs my attention, because that's a big chunk of the order book just sitting there looking for price to come higher to it. So 79.10, 79.40, those are two pretty big areas, even 79. But we can see there's a lot more interest higher than lower overall in the crude contract. And that seems to be a bit of a theme. In the 2-year notes, let's see how we got that auction, similar reaction actually. Look at that. So you had the pop into the 7-year auction. There was some short covering maybe for the first 20-25 minutes, and now we've sold lower than where we were pre-auction. So that's actually kind of interesting to me to see that. Not typical that you would have a strong auction, and yet the market just kind of doesn't seem to care too much to keep bidding that. In fact, now we're moving lower off of that. So that means rates are moving higher, which can put a little bit of pressure on equities. Take a look at the 30s here. Same sort of look as well. You had that pop post-auction. Now you're just seeing more selling and to lower levels than we were pre-auction. Let's take a look at the euro, and we're going to do it in the same context. So a bit of a bid into the auction, now selling lower. So dollar strength becoming a bit of a theme here. And usually higher rates, particularly on the 10s, tends to lead the dollar higher, and that can potentially put pressure on equities. So let's see how we're faring here. We got back up to that hot call level. We've done it more than once, but I would say could see a little bit of a pull back to point of control midpoint from here. We'll see. Let's sort of watch what the prevailing flows look like. Let's see if we see any interest building below. We still have that hot put 68,000 transacting right there. That's going to be about 50.61 on the ES contract. So there is still the most interest in lower prices, both in terms of resting liquidity and in terms of where options are flowing. And there is no deal yet for a Israel-Hamas ceasefire. There's more work to do. This is just coming out from the Defense Department spokesman Kirby. Also, we're seeing some reevaluation in what people are looking for from the Fed. So remember, we got into this year and there was the expectation of 150 bips of cuts or so, right? Give or take 10 bips. And so that would imply 6 cuts. Now we're seeing Fed swaps pricing in only 75 bips of cutting. Now, Aisha and I have stood by the whole time saying 2 or 3 is really the most we expect. And maybe even 1 or 2 ends up being the reality. Now we're starting to see the market price that in more. And this often happens first in rates and then eventually translates to other areas like risk. So just another heads up, you're seeing the 2s move lower in price. You're seeing the 10s move lower in price. 30s are moving lower in price. You're seeing a number of fixed income instruments, moving lower in price and higher in rates. That does change some of these relative equity valuations and risk premiums. And that can translate into some risking off, some profit taking in equities here as rates imply they're becoming more expensive. So we will be wanting to watch those rate moves, particularly in the 10-year. I think that's going to be what most of the market is watching, even some of these algos that derive their trading parameters based on intermarket dynamics. So again, that move that we saw from the 7-year auction to the present now starting to cut lower, that's not really what you would want to see, if you're going to get more bullish, particularly on the longer duration side of equities, because that implies that in all likelihood you do have a bit of a catch down type of scenario. And let me see if I've got a chart of the 10s handy here so I can share that. Show you what I'm talking about. Here we go. I do have that. So I'm just going to pop that on screen from my trading view. And so you can see this is the 10-year note futures, right? And you can see they're testing that lower support level where we've been consolidating. This is also really like getting below this large high volume node. And we can see that this is a similar level where there's been interest in the past. So there's every possibility that maybe we do get a bid back here. We've seen it twice dip below and sort of have this head fake and get rebid. But if it does not, and if we cross this low volume node and get back down here to this lower area where we've consolidated in the past, and there is some decent support at these lower levels, I'd say probably just around maybe 108.08. But I would also caution and just say if we do get drawn down lower here, we can see rates start to move appreciably higher. This is a chart that moves inverse with interest rates on the 10-year. And the price chart, which is what you should really focus on. If you want to do technical analysis on bonds and you're really interested in where, rates might go, I would suggest looking at the price charts rather than the yield charts. I know a lot of folks focus on the yield charts, but I think it's harder to do technical analysis on yield charts. So we can see that move pushing lower, just looking more at the microstructure now. And that does concern me because it does suggest, again, that rates could move higher. And we've had a lot of interest in sort of lower prices on these 10s. We've also seen these icebergs come in and not really deter sellers. So that's a buy iceberg right there. You can see it in the subchart. Someone came in and bought 1,000 of these 10-year note futures contracts, and that didn't necessarily deter selling. We still saw some additional selling come in. So I'd also say, that isn't really absorbing the pressure so much as maybe slowing it a bit. So go back to the S&P 500 futures here. And we could see they also had that bit of a pop from the 10s or the 7s auction, right? But they continued moving higher even when we started to see rates moving higher. So it is interesting how for now equities are ignoring that, but we'll see if that remains true as time goes on. And I'll just pull up one other chart that I think is at least interesting to look at in the context of what we're talking about here. And I'm not sure how well this will show, but here it is. This is a chart of the 10-year note futures in red and the NASDAQ composite in blue. And there's that divergence that you can see where these were pretty positively correlated, and now they're kind of splitting apart. So it'll really be interesting to see how it resolves. Obviously, rates could move lower. 10s could get a big bid and kind of catch us up to the middle. But there is some chance that equities also pull back, as is being implied by the current move in rates. So just wanted to pop that on screen to show that, as to that's one of the areas that I'm looking at pretty closely. And these inter-market dynamics are something that I wouldn't necessarily day trade off of. As you can see on the 10s and composite chart, it can take some time, before these things sort of catch up. So this is more of something that I would focus on a swing trade time frame. Let's take a look at what's going on over here in the NASDAQ, the higher beta cousin of the S&P. We do see some liquidity stacking above. This is another illiquid trader. This thing has about 8.1 thousand contract depth across the order book. So, when you see a resting order of 100 plus and it's not just right around this band on price, which is kind of how the NASDAQ tends to trade, it does attract my attention a little bit. You see 18,050 as that level. So I would be keeping an eye on that level, particularly as we get closer to the close here. We don't see much like that below. It's really above interest in the NASDAQ here. And the Russell, well, the Russell's kind of all over the map, but it's been comparatively stronger than a lot of the rest of the market today. This is another one of those days where I do feel like there is some degree of short covering driving the trade in the Russell as well. And I think that because we see IWO outperforming IWN. IWO is the growth portion of the Russell. It's really unprofitable growth companies for the most part. 40% of the Russell's companies don't make any money, and most of those are in the IWO ETF. Now, obviously, you have regionals and value stocks in general in the IWN component, but the amount of outperformance you've seen with IWO suggests that there's both more risk appetite and more short covering happening here. So we'll go back to the S&P, which is now just at that hot call level. We also see Bitcoin bid up pretty well to 57.5 thousand. So you definitely have that speculative risk appetite showing up in other areas as well. It's interesting to see just how much speculative demand there is. There was a headline that just came from Financial Juice talking about the crypto market being worth $2 trillion, or at least capitalized at $2 trillion. Worth is a whole other matter. For the first time in 2 years, which certainly doesn't suggest that we need interest rate cuts anytime soon. In fact, if anything, we see the market starting to price that in now, with Fed rate cuts only being seen for 75 bips of cuts this year versus what we were seeing earlier, around 150 bips. So that's, a sign that things are changing. We see that in the way that interest rates are moving. And I think that eventually that may translate elsewhere. But for now, there is still a lot of sort of speculative fervor in the equity markets. And I think that, we see even in today's trade, there's this growing divergence between rates and risk. And just in general, a lack of concern about now the Fed being priced in at much less dovish, accommodative policy this year as well. The idea of QT continuing even into the next rate cuts being a possibility. The Fed could taper the rate of quantitative tightening, but keep actually running off their balance sheet as long as possible. Take a look here at the NASDAQ. NASDAQ is also seeing a rebid here, pushing above that point of control over the last 30 minutes and seeing a continuation. I like to see the pattern of these sort of, higher highs, higher lows, and we do seem to see a little bit of that building here. We also have that bid at 18,050. I think that's going to be a pretty important level. We can see that bid growing as we get closer to the last hour here into the close. Russell's sort of chopping sideways here between VWAP and the point of control. But it has been the leader today. Not a lot of liquidity really anywhere else than just around price in this contract right now. And this is, only 6.8 thousand contract order book depth. So not a very liquid trader. I mean, look at the S&P trading at 54,000. That's quite the contrast, right? And if you want to see a really kind of liquid contract, look at the 2s or the 10s in particular. The 10s here, you've got, wow, like 463,000 order book depth, right? So that's quite a contrast. That's why when rates move a lot, and you see that big move happening in futures, it matters because there's a lot of transacting. There's millions and millions of dollars transacting to make those moves. Got some meta calls coming through here towards the close. Both targeting Friday, 400 strike and about 350,000 in premium. And we can see, again, point of control rebalancing close to midpoint. We do often see convergence between these levels. I think it's important to pay attention to that. that convergence, because it's telling you in more ways than one where the level of balance is in the market, right? Where the kind of midday pivot level could potentially be. And between the midpoint, the point of control, and VWAP, you can kind of use this as a line in the sand. Right now, just at a glance, you can see buyers are in control, and we're heading towards the level where they're showing the most interest in S&P options translated to S&P futures levels. Let's just zoom out a little bit here, see what else we can see. We got that wall of calls at what is SPX 5100 and translates to ES 511050. That's going to be a potential area of resistance to look for. It's something I talked about a little bit this morning. We've also got a decent amount of interest just by this gamma flip level that our naive model has calculated. I think that also will be a pretty important level. But for today, it's probably going to be really about the hot and warm call. I don't think we'll get too much extended beyond that. If we do, that call wall is likely to be upward resistance. And then below, if we see a bit of a pull, the market's showing a lot of interest in this hot put around 50.61 on ES. And then we can see in the session volume profile here, you know, buyers have expressed a lot of interest around this price, around 50.80. So if we get meaningfully below that and the midpoint, which would also be VWAP and the point of control, that shows you buyers would be kind of out of favor, right? Right now, we're above all of these sellers that were selling aggressively into about 50.7750. So that's another reason buyers are in control, because those contracts and everyone below are offsides here, as are some of these that, as the price pushed higher, we can see some of these other attempts by sellers also put them somewhat offsides. Earlier this afternoon, we had a decent amount of premium flowing into the NVIDIA 850s for the end of, looks like end of March. That was about $677,000 going into those, so a pretty aggressive upside bet on NVIDIA there. All right, we're going to zoom a little bit into the microstructure here. And we can see just how price really gravitates towards that area of interest, those call buyers and sellers, which is what becomes 50.85 in ES and is about 50.75 in SPX. The delta between the two is 10.5 right now. Now, there's still talk about a government shutdown as early as this weekend. I don't think it'll be a thing that happens, and if it does, I don't think it's going to be that big of a calamity. It typically is not. It's usually a temporary affair and shakes things up a little bit. You know, you could see some more volatility in rates and equities, but people that are prognosticating that it'll be the doom of everything, I think are, you know, taking it a little bit too far. We've been through many of these, and the market reacts less and less to them. I also don't think it would last very long. I think they'd find a continuing resolution. But this is a government that hasn't had a formal budget for the entire fiscal year of 2024, which doesn't sound so bad if you're like, well, that only started in January. But the government's fiscal year started on October 1st. So you haven't had a budget for about 5 months, which is less than ideal. You know, it kind of calls into question what other countries do in these types of situations is they dismiss their legislative body, which in a lot of countries would be a parliament. So they dismiss their parliament if the parliament can't pass a budget, right? It kind of makes sense to just dismiss the whole Congress and Senate if they can't pass a budget either. And it's not only that they can't, but it keeps happening, right? We keep having these episodic threats of shutdowns and feel like it's no way to run a country. Should probably have folks that are, you know, have more skin in the game. And if one way of doing that is you don't keep your job if you can't do it, like anywhere else in the world, really, that would probably be helpful to align the incentives. So we do see a little bit of a push here above the hot call level. Let's just zoom out a little bit. We do see the warm call interest building just around 50.90.50 in ES. Now let's zoom out just a little bit here. And by a little bit, I mean a lot of bit. So we are pushing to the top of this range that we saw this morning. Let's see if we actually can convincingly break above it. We do see liquidity building above us. So if we can, I do think there'd be a decent amount of energy released. We'd at the very least get to that warm call. And as we talked about, that call wall becomes a more reasonable target if we break convincingly above there and build acceptance. So now we'll zoom back in. See some interest in these TLT options. $80 strike for the end of next month, $85 for the end of next week, about $300,000 in premium paid between the two. Don't really have a busy auction schedule this week. That 7-year note auction today, I think, was pretty much it on the bigger side of things. Let me just double check to confirm. I mean, bills, I don't really look at that because they don't tend to have much of an impact. Yeah, so it really was just that. The rest of it is bills tomorrow and Thursday. So you've got some 17-week bills tomorrow and $60 billion, then $185 billion in 4s and 8s on Thursday. But those auctions, which happen late morning, don't typically have a major impact, and they're usually very well subscribed by the market. And you're paying more for someone to take several weeks of risk than you are decades of risk. So why wouldn't they be well subscribed, right? That is to say, you get paid more for taking on 30 days of risk with the Treasury than you do 30 years. And there are several other examples across the yield curve you can make that are similarly curious. Let's take a look at our high beta friend, the NASDAQ. We're also going to zoom in a bit on its microstructure here. Let's see, is that, yeah, there's still that interest up there at 18,050. We'll be watching that. And we just got over 2 weeks until contract roll. Really going to be not this Friday, not next Friday, but the Friday after. So that's going to change some of these trading dynamics too. You know, you've got that quarterly options expiration plus contract roll in mid-March that can shake things up a little bit. And typically March is actually a really bad time of year for volatility, believe it or not. The VIX tends to fall 80% of the time in March, going back to 2009. Interesting to think about. Now, will those dynamics play out this time around with vol as sort of shorted as it is now? We'll see. I don't know. But it's at least interesting to contextualize it based on, you know, history. And we've seen a couple of Marches where there were pretty big crushes in volatility from very elevated levels that would be in that study. March of 2009, March of 2020 would be prime examples of that. So that could also distort the seasonality just a little bit. Let's go back to the S&P here. You know, when the market trades like paint's drying, you can just zoom in more and it can become somewhat more exciting. Like this little drop by a point almost looks like it's exciting here because it seems like it's so much space that it's moving between. And JP Morgan expects that the amount of equity issuance that we could see from IPOs and companies using equity instead of debt could increase this year and for the years to come, as it's now cheaper than bond sales or other forms of debt issuance for companies. So you could see a little bit of dilution in some of these unprofitable companies that are probably going to struggle to raise debt and are going to likely have to issue shares. Also likely to see more IPOs. Reddit being one, RDDT coming later this year. The social media company powered by advertising pretty much exclusively, although now licensing user content to AI. We'll see how well received that is over time. But that basically means whatever you post on Reddit is going to wind up at Google and possibly other companies like OpenAI as time goes on. To some degree, that's already the case, right? Because there's a lot of scraping of these websites that's happening. But now it's going to be more official, and there's going to probably be more thorough access to data and telemetry and otherwise. NASDAQ S&P pretty much almost identical here in the way that they're trading now. I like to look at the NASDAQ for a little bit more of a clue as to where momentum may go, just because it's a thinner trading vehicle. So it does tend to give us a little bit more of a lean. It does seem to be suggesting lower from here right now. We're making new lows, and we kind of have this lower high, lower low micro trend reversal happening here. S&P seems to be following as well on that same micro trend reversal. So let's zoom out a little bit here, see what's happening with the interest below. We do see interest below growing around the midpoint and the point of control and VWAP. This 337 offer, there's a stack though. You can see it in how much that liquidity has become a little bit more pronounced at that level versus what we had seen earlier. People seem to be kind of coming and going there. As price comes down, you see more interest. As it moves away, you see that interest diminish. So as price is moving down, that interest is once again growing. So we'll keep that on screen. And we'll just bear in mind that we also have some pretty decent interest in puts below as well. And that 50-50 SPX put is the most active on the chain, followed by 50-60. We can see that in ES as well when we zoom out a little bit. Those are the same levels translated to ES where there's that 10.5 point delta. The hot put coinciding with this large area of resting liquidity. So again, you can see that convergence of interest. The warm call, there's a lot of offers up here, the midpoint, and then the hot put. So you can kind of see the implied trading range in the market where there's interest coinciding with also where there are key levels of options activity, and then that midpoint, because that options activity isn't decisively different. That is to say, the delta between the top two calls and the top two puts is still within about 20%. We can also see more resting liquidity now building below us. As we see the micro trend structure reversing and moving lower, that build of resting liquidity can become more magnetic. Let's take a look at the NASDAQ here. Very similar look as the S&P again. They're kind of mirroring each other more. NASDAQ saw the point of control actually pulled higher by some of this recent buying. So that is good for bulls, especially since we're now pushing above it. And we do want to keep in mind, again, that level of resting liquidity above at 18,050. It still remains pretty large. 116 on the offer. So you kind of have the opposite picture in the NASDAQ that you do the S&P, right? The NASDAQ's got a big amount of interest above. The S&P seems like it has a bit more interest below, right? So we'll see how this resolves. Makes for an interesting last hour on an otherwise somewhat boring day. And that's our unusual options screen there. Didn't mean to pop it over on you all, but looking at some of these different levels from our Discord. This is kind of streamed during regular trading hours, as is our Bookmap with the SPX options visualizer. And I think Bookmap is a helpful tool for multiple time frames. Obviously, it's good for day trading, but I find it's pretty helpful for swings as well, because some of these areas of liquidity end up being on the books for quite a while and can become key turning points. And for folks out there listening that think Bookmap could be helpful to their trading process, you can check out traderade.com/bookmap for up to 40% off. Just scroll down to the specials. And if you like the SPX options visualizer that you can see up here on your screen, it is on the Bookmap Marketplace now. You can visit traderade.com/SPX and get your own copy. So again, those areas of interest on S&P, they're coinciding pretty well with the levels we're seeing in the SPX options visualizer as well. That SPX options visualizer is taking all of the data across the chain. So there's about 10,000 different contracts that it looks at. And it refactors that every minute and provides that information. And it just links right into Bookmap so you can see it. And you can see these areas of coalescence where resting liquidity and options flows or positioning are both in the same areas. And that's where it adds a lot of value because you can increase your confidence in just how important those levels may be to the market. Now, tomorrow we're going to have GDP data coming in, second estimate, and that'll be for Q4 2023. Consensus is 3.3%. So we'll be watching that pretty closely. If it comes in much higher than expected, then that could be something that sets rates higher and risk lower. And the opposite if it comes in much lower. So that 3.3 mark, I'd say, you know, a 10% deviation more or less is where you'd start to see the market react more. Otherwise, it'd probably be more just noise. In that GDP data, we also get core PCE quarter over quarter, which I think is an interesting reading because it gives you a sense of, you know, inflation in a time period between the monthly and the yearly where it's typically presented. And we see a bit of a push higher here, right back up to that warm call where there is a large level of resting liquidity on the offer. And some iceberg buying into that move as well. So you see that 400 contract icon. You also see the subchart pushing up and the iceberg's radial going into positive territory. So that's also showing you there was a bit of a buy, a bit of a passive accumulation into that move by a larger player. Let's take a look at the NASDAQ here. Very similar look as well. So got the NASDAQ up about 0.25%. S&P up about 0.16% here as we're just about 31 minutes away from the close on Tuesday. We'll move over to the Russell here. We can see it's just sort of trying to grind out potentially this reversal. You can see it playing around with the point of control and view app, but eventually trying to resolve higher here. We'll zoom in a bit so it looks more like some of our other charts that we're tracking into the microstructure. Crude coming off of its recent highs, but still overall pretty constructive day for oil. I've been watching a couple different levels on it, but really as we're moving above 76, buyers are in control over longer time frames, and I think we can see how that's playing out overall. We do see some relief in rates as we're approaching the close here. Just this little bit of a bid here back in the 2s after that drop earlier. See some interesting options trading here in Len. That's going to be Lennar Corp. That's a home builder. And they're targeting the 155s with about $435,000 in premium paid for 2 weeks out Friday expiration. So they're looking at a bullish upside of about $1.50 higher from here, but that's a lot of premium they're putting into that. This stock is bid down, is actually selling down today, just down about 1/3%. But over the past year, it's bid up 60%. It's up about 4% year to date. And market internals as we approach the close got 60% advancers, 36% decliners. So not great, but certainly not terrible either. Just sort of in the middle. And we have price of the S&P 500 futures contract just trading around the most active option on the chain, which has now become the hot call. That's the most active call trading on SPX. Shifted into ES levels. That means higher 10.5 points. Got about 15 minutes left to the close today. Been a somewhat boring trading day. Not really a lot of action to write home about in these markets. Crude's bid up over 1%. It's really at the top end of this trading range that it's been in. I think if it can start to break above 79 and change, and I covered it a little earlier on my my technical session, but I do think there's a lot of room higher in crude, like another 6-7% if we can start to break out of this trading range. Platinum looks interesting. It looks like it's trying to put in a kind of complicated bottom. I'm not too interested until it shows some signs of reversing, but that's one to keep an eye on. And natural gas is actually bid higher today. I'm not sure if that's legal, so we might need to contact the appropriate authorities to check. I had once renamed it Natural Crash because it just couldn't seem to get out of its own way. So let's see if it can prove us otherwise by having this week be a week where it actually trades higher from the start to the end of the week. Shift over to the NASDAQ again here. Pretty similar as the S&P, but just sort of consolidating here, sagging a little bit, pulling the point of control just a little bit lower, about maybe 8 points lower here. Russell comparatively looking a little stronger, as it has for much of the day. And we got the 10s here, kind of slumping. They bounced a little bit, but, we looked at this earlier. And really, you can see from that auction, they had that big bid and then just slid all the way down. So not a great look in the rates market here. So we'll zoom in a little bit in the S&P here, in price and in time as we get closer to the close. Last 20 minutes tend to be a bit more volatile. So if you're trading intraday positions, it's not a bad time to start looking at squaring up one's books unless you have a strong feel for how this is going to close. Now, coming up after the close tonight, we have earnings from Devon, First Solar, Kava, Array Technologies, Beyond Meat, Lemonade, Splunk, and some others. It'll be pretty interesting to see how this all goes. Beyond Meat is a company where there's such short interest that if they had a positive catalyst, this thing could zoom. But, this is also a company that is just hemorrhaging money, has been perpetually mismanaged, so it would take almost a miracle. That's why so many hedge funds have bet against it. The float that is shorted is about 38% on a 61 million share float, which is why you get these episodic squeezes. So long story short, if they have better earnings than expected, this thing could zoom if the market receives it well. But on the other side of it, there's a lot of folks that are looking at this company and saying it's destined for lower prices, and they probably have more information than we do, which is why they're in such a big short position. So any squeezes would probably be sold into to lower lows, or at least recent lows. We do see a short squeeze playing out in Carvana. Carvana is squeezing up 17.3%, just continuing this squeeze event that's been playing out in the stock, now breaking above a pretty key level of resistance, that CVNA. There's another short squeeze happening in Lemonade here, up another 8.61%. And these are two companies that have a large amount of their float shorted, and we're seeing a pretty big squeeze trade, both on a breakout on technicals, but also there are catalysts with these companies. Lemonade's earnings coming up tonight, so obviously a lot of confidence being expressed by longs and maybe some skittishness by shorts coming into their earnings. Let's zoom out a little bit, just take a look at the liquidity picture here. Still a lot of liquidity at that midpoint from the SPX options visualizer, which is just below the point of control in VWAP. So we can see the market's really looking at that midpoint too. This is a level the visualizer creates when there's basically a balance between the four most active strikes on the chain. And that's what we're watching for, you know, really seeing that at where we are right now puts buyers in greater control, both in terms of where there's been, you know, aggressive selling on the S&P that we can see in the red part of the session volume profile, but also based on, you know, that we're moving that much above the midpoint, almost 10 handles, showing that there is some excessive demand coming in from shares and futures rather than the options market. And we're getting pulled right into that most active call strike as well. We've been kind of trading there for a little while. Got about 19 minutes left into the close here. Been kind of a sideways tape here as we approach the close. Just about 17 minutes left till that closing bell. And we'll start to see some of those earnings come out after hours from the companies we just talked about. Lemonade and Beyond could be squeezes if they get better than expected earnings. They're both highly shorted, and they do have the potential to push higher on any positive catalyst, but I wouldn't count on those lasting long. And the early marketing on close imbalance right now is about 126 million on the buy side, so fairly inconsequential. So I'd say really, you know, keeping it simple, unless we cross below the midpoint, I think buyers are pretty much in control. And we can see the market kind of agrees. They put up this wall of liquidity here. We've got the point of control and VWAP right above. So this is really our key area in these last 15 minutes or so of the trading day. It seems like the market's inclined to try to push higher back into that second most active call. And we do see liquidity building up in that area as well, about 391 contracts right around that strike, translated to ES levels. Do you see the cumulative volume delta beginning to climb out of that deeper negativity now, negative 46.91. Sorry, negative 45.39, kind of climbing out of that negativity as we push into the close. So there is, again, some real buying happening underneath the surface in the ES contract, outside of the relative balance that we have in the options market, where prices pretty well been stuck to that most active call strike in S&P cash levels translated to S&P futures levels. The options market showing the influence it has over the futures and broader stock market, where the S&P 500 index trades about 1.2 trillion of notional every day in options, and about half of those are set to expire in 6.5 hours or less. It's pretty incredible if you think about it. And that's one of the sort of tail wags the dog elements of how the market's trading these days. So that's one of the reasons that watching options flow, particularly in SPX, is so important, because it can give us clues. And when we look at it in something like Bookmap, we can see where the levels of resting liquidity are in the futures contracts as well. So then you get a sense of convergence, right? So we have the convergence with the warm call, with the midpoint. We go down to that most active put strike. We also have that convergence there as well. So it just makes it easier to look at those levels with some degree of confidence that they're important, right? And we also see the midpoint now fading because activity on the call side has become that much more in favor. There's now a greater than 20% variance towards calls. So the midpoint now is being removed by the SPX options visualizer. And that's why I created it overall. The SPX options visualizer was to have a way to be able to see where all of these options are being traded and where there's positioning without having to get outside of Bookmap, because I like to use Bookmap to kind of dive into the internals of the markets. You can see I plug away at a lot of futures contracts, whether it's equities, commodities, bonds, or currencies. And so, having this for S&P, which is the largest options trading vehicle on earth by a lot, is really helpful. So I would say, if we're not watching how S&P 500 options are trading and we're trading S&P 500 or things that are highly correlated with it, then, we're missing out on a big part of why some of these elements are happening in terms of price discovery and overall market outcomes. Yeah, bigger buy side imbalance, 1.4 billion now. For markets on close, about 10 minutes left in the trading day. We can see price now just gravitating towards that second most active call strike as we saw the midpoint fade away. And we can see that, market traders that are more short term, that are trading these zero DTEs primarily, are favoring transacting in calls largely on the buy side as we get closer to the close. That was one of the reasons the midpoint disappeared, because we could see, the puts put together versus the calls put together, there's much larger activity in the calls there. We can also see some of that downside liquidity thinning out just a little bit and upside building up more. So that's really one of the keys of trading, is just going with the flow. We are smaller elements of this market. We can't necessarily, hope to be able to capture much more than what the market is willing to do in whatever frame of time we're trading. Like, the market doesn't really care what our goals are. It doesn't care if we need this amount of money by this time or what we're hoping for. It's just going to do what it has to do. And seeing where there's interest and where there's been transactions and where there's, flows happening can all help us to get a better sense as to what those ranges might be. Let's take a look at the NASDAQ here, as we're about 8 minutes away from the close. Just saw the point of control get pulled up, but now price is starting to fall below it. We did have cumulative volume delta pull a lot higher, but now we're starting to see some selling pressure coming back in there. And there was a little bit of sell side icebergs. We can see those on top. Nothing too big in the NASDAQ. Price is now building above that point of control again. We do see interest building higher in the S&P contract here. I think the call wall would be really the upper limit for today if we have that kind of excitement. But we do see interest building, right here around 50.91.50 and 50.96 or 50.97, I would say. Now, to make that bigger push, I would like to see a little more volume come in. These last 10 minutes, typically, the last 20 is more volatile. The last 10 is even more volatile. We'll see if it lives up to that, though. So far, this has been pretty benign. Now, just about 5 minutes left to the closing bell. Getting right back up here to the second most active call contract as interest builds above where price is currently trading. And if you look at the market as a three-way auction, you either have an excess of demand, an excess of supply, or a market imbalance. Right now, you could say there's an excess of demand, as we're seeing with the way the most active call contracts have sort of become the area where there's much more interest in transacting, both on the option side within SPX and then also in the S&P 500 futures contract. Such an orderly close so far. There's just really not much happening here. Got a little bit of interest below at 50.80 that built up recently as well, but most of the interest that's built up recently has been above. Got just over 2 minutes left in the trading day. Price again gravitating towards that second most active call strike on SPX here. Got interest building above. So we had a couple signs here that we could keep pulling higher. We got volume also increasing in these last couple of minutes. I hope everyone found this stream useful. If you have any questions or feedback, let me know. It's always fun doing these. Got just about a minute left here in the trading day, then I'm going to hop off. And I hope everyone else has a great night, and look forward to coming back in tomorrow and taking a fresh look at what's going on in the markets and beyond. You can see all that liquidity coming in as we close out too. It's pretty incredible how much comes in that last minute or so. And then you'll see it start to vanish again. So, great trading with you all. I'll catch up with you soon. I hope you enjoyed this stream. Pleasure sharing my thoughts.